There's a lot of data. There's a lot of information that you want to make sure you've got a grip on when it comes to retiring with confidence. Today, I want to talk to you through the 3 numbers you must know to retire with total success and total confidence. Keep it right here. Good day, everybody. Chris Herline here of Reap Financial, host of Wealth Radio, every Saturday on KLBJ, and host of Retire Ready TV on KXAN every Wednesday. Want to make sure you hit the subscribe button to our YouTube channel here, hit the bell for notifications. Today, I'm going to be talking about 3 numbers you really must know to retire with total confidence. And make sure you stick around because most people make the wrong assumption about what numbers will help you retire with the most confidence. That's what I'm going to dive into today. So when we kick things off here, let me talk to you about this. Social Security is one of the greatest assets that you have. And the amount of money you stand to pull out of Social Security between you and your spouse throughout your retirement makes a lot of Americans' 401k balances look like chump change. It can make your 401k look small. And so having a plan as to when you're going to take Social Security is very, very critical. This is your money. We want to make sure you wring every nickel out of it. So the first number that you must know is what age are you going to start taking Social Security? And this is not some arbitrary number. Believe it or not, the majority of Americans take Social Security as early as possible. They take it at 62. But remember, there's some penalties that come along with taking it early. If you're still working, you may be facing an earnings cap. But one thing you got to consider as well is what tax are you going to pay on Social Security? A lot of wealthy families, they'll retire earlier and they can take Social Security at 62, but they say, I'm going to wait, I'm going to delay. And that may make sense. But ask yourself, are you going to be in a lower tax bracket in your early years of retirement or in your later years of retirement? And a good majority of you that have saved well, that have a lot of money in IRAs and 401ks, you may be in a position where you're in a higher tax bracket in your 70s and 80s than you are in your 60s. There's a number of reasons for that I talk about on our YouTube channel here, but let me tell you this. This is a number that you must be aware of, is what is your tax bracket when you walk into retirement, when you hit age 70, more importantly, when you hit age 73 or 75 and you have to start taking required minimum distributions. Because if you wait till 70 on Social Security, when you get your biggest check, right, you maximize it, you defer and get all the credits, that may be well and good, but you got to consider the fact that you may be stepping up tax brackets at age 73 or 75 when your required distributions kick in. And that may mean you've left a lot of Social Security money on the table while you were deferring, where otherwise you could have been taking it. So again, it's not for everybody when it comes to taking Social Security early, but again, taking away that the age in which you start Social Security is critical for your confidence, okay? And many families that we work with at Reap Financial are finding that taking it early actually makes sense for their situation. So another number you got to be aware of is how much money is positioned to grow tax-free. Why is this so important? It's critical because it's just as important as how much you make is how much you keep. Think about that. If you are making double-digit returns in your investment portfolio and you've got no plan to keep it, what's the point? The more you can keep throughout retirement, the more you can spend confidently, the more you can gift to family or causes you believe in along the way, or just ensuring that you have a nice nest egg at end of life. But it's not just about your tax bracket today. Where you're saving money, the type of money you have is very important as well. A lot of people think about diversifying their portfolio amongst many investments. You need to have tax diversification in your portfolio. You need to have money that's going to be not taxed, somewhat taxed, always taxed. And when you think about your portfolio mix, the majority of your money may all be in IRAs, 401ks, and that's where people run into the tax issue because that money will always be taxed. Now, we get a lot of questions around this area is, what is tax diversification? Be sure and leave your question in the comments and I'll try to address that in weeks to come as we drop new content here every Wednesday on our YouTube channel. Now, let's talk about the third and really the most important number. It's your budget. It's making sure that you know how much you need to maintain your standard of living every year. Because a lot of people think it's how much I saved. You know, if I get to $1 million, $2, $3, $5 million, then I can retire successfully. And I'll tell you, just from our years of experience in working with successful clients just like you, it's not about the number you've saved. It's how much you need to spend to do what you want to do. And then you compare that as to, can the portfolio keep up with that? And so really honing in on how much you need to spend, really refining your budget, not a budget that's got to be stringent and no fun, no food, that kind of thing, but knowing kind of your parameters. When you retire, there's only so much money. And so understanding how much you can spend confidently is one of the most critical numbers to retiring with confidence. I get more into detail about creating a solid budget in this next video. Click here to watch.